Hi guys, welcome back to the channel. So this week I'm going to go over the credit spreads I'm doing. So I'm theta gang this week. I'm just selling spreads. I'm collecting credit up front, and I could either hopefully hope that they expire at 0 and I keep the credit, or I'm taking the risk of whatever collateral I have down on the trade, losing that collateral and keeping the credit anyways. So far it's been working out good. I haven't really messed with credit spreads yet. I've just been doing debit spreads, but I want to try the other side of the spectrum. Instead of buying spreads up front, collecting a credit and selling spreads, because more than likely options will expire worthless. So I think you have a better chance of making money off credit than off debit. And then the other reason why I think this is because, think about it, when you're in a debit spread, or not even a debit spread, even when you buy just calls or puts, you have the price working against you and time working against you. But for spreads, it's a little different. You have the price working against you, but you have time working for you. So I have either the price working. So for these credit spreads, the price could be working for me and time's working for me, instead of just the price. So that's a benefit of doing spreads. And then the downside is it's limited risk and limited reward. So Monday I opened up 3 spreads, closed one Monday for a day trade, closed one yesterday, and then I'm still hanging on to one. So I'll go over all of them. The first spread I opened was a SPY call credit. These are all bearish. Anything like a call credit means that you're playing the downside. You don't want the price to go above your lower strike in the credit spread. And that's the opposite of a put credit spread. A put credit spread, you're playing the upside, and you don't want the price to go above your higher strike price. So here's the SPY. Let's go to Monday. Because this is when I got into these trades. Yeah, so here's Monday right here. Actually, let's look at the daily chart. I have 2 lines up here because I played one at 386 and I have one open at 385. Alright, so let's look at the first one. So I sold a credit spread on Monday. It was the 386 or 387 by 386. So what you do is you buy the 387 and you sell the 386. So you're getting a credit because, and the reason why it works like this, it's a complete opposite of a debit spread. Actually, I'll go over it after. So because I'm selling 15 contracts at 22 cents, I'm collecting more money than it costs me to buy 15 contracts at 50 cents. So because I'm buying the 387 and I'm selling at 386, there's a $7 difference. So that's a $7 credit I receive up front. And because I opened 15 contracts, I collected $105 on Monday for this trade. And the lower strike price is 386, so I want SPY to stay underneath 386. And these were 113, so these expired today, but I'm already out of this trade. So I collected $105 right around 9:45. So right around 9:45, the price is around 378.25, and 386. So way up here, the price would need to go over the next 3 days, which you can see it pretty much stayed pretty flat. Never really went above 380.50. I could have let these expire today, and I would have gotten my collateral back. So this trade right here, it's a $1 spread times 17. So $17 was my collateral that they held, times 100, so $1,700 they held as collateral. That's how much it cost me to make this trade. Now if I either close the trade for a profit or I let it expire worthless, then they release that $1,700. So yesterday I ended up putting, where is it? It's not this one. Right here. 387, 386. Remember, I had 15 contracts. So time ended up eating away at this by yesterday. These contracts were only worth $1. So because they're only worth $1, I put a limit order to buy them back for $1 a piece, or $15. So that $15 comes out of my credit of 105. So I slowly got filled toward the end of the day, right before 4 o'clock. Like at 3:30, I got filled on one contract, and then I slowly got filled all the way to 4 o'clock, and I was out of all of them. All 15 contracts I bought back at $1 a piece for $15. They released my collateral of $1,700, so I got my $1,700 back, and then I made, so 105 is what I collected. Then I bought them back for $15. So I made $90 off this trade. So that was trade 1. Because January 8th, because this is all last week. You could see I ended up opening a couple orders and canceling them because I wasn't getting filled. But this is what I got filled at. Order number 2 was an Amazon call credit spread, 3,300 by 3,290. 2 contracts, $80 a piece is what I collected. So $160 I collected. And this cost me $3,290 minus 33 is $10, times 2 is 20. So this cost me $2,000 collateral and $160 credit, which I'm still holding this trade. $3,290. So it is looking bullish today, and this expires Friday, so it's Wednesday. So we're at 3180, 3280. So I still have $115 to the upside until I get to my lower strike. So I'm just going to wait this out, and just hopefully time over the next 2 days will eat away at these contracts and they'll expire worthless, because I want to collect the full amount. So that's that trade. I am in the plus. I think I'm up about $50 or $60 right now. Then on Monday I tried doing some other type of iron condor spread. It was just playing around with the ratios. So I ended up selling 2 at 386, and then I bought 2 at 387, and then I sold 1 at 372 and bought 1 at 373. It ended up being some weird thing. It would have worked out because this was like some type of iron condor spread. I'm not really too sure exactly what it was, but it cost me, well, it was a credit, so I did collect $25 up front, and I think this trade cost me $200 collateral to open. So I wasn't really too sure about this, so later in the day on Monday, January 11th, I ended up buying it back for $20. So I got filled. As you can see, they're all closed. Here's all of them open. It's the same exact SPY 4 option order, SPY 4 option order. So I made $5 off this trade. And then today, so that's two spreads opened and closed by today. So I made $95 so far this week. I'm not going to say I made anything else because nothing else is closed out yet. Let's go to my portfolio. I'm holding 2 spreads. That Amazon spread, I'm up 60. The one I just went over. This expires Friday. And then because the SPY expires 3 times a week, Monday, Wednesday, and Friday, I played the Wednesday SPY on Monday and I closed that out on Tuesday. So here we are Wednesday. I got my collateral released. So I'm playing the Friday expiration today. The closer you play to expiration, the cheaper the contracts are and the less money you're going to make. But the more idea you have of being right, because you don't have that much more time before the contracts expire, so you could kind of figure what the move is going to be, or what the standard deviation is by, if you look at the implied volatility of the contracts, it will give you a percentage, and you could figure out the standard deviation, which is the average move that they think it's going to go by the expiration. It's a lot of equations and stuff. I know Tastyworks figures it out for you and gives you like a bar, like a measurement graph, so you could kind of figure out where the stock's going to go by a certain time, up or down, basically the range. SPY doesn't move that much. I mean, it could. Don't get me wrong, any of these plays could turn and go against me, and I could take a big loss. But I've been playing pretty far outside the ranges of the stock movements for SPY and Amazon. So I've been pretty good so far, but you never know. So look, SPY's moving down. I've been down on this all day. I'm thinking of actually maybe selling this. I can make $17 off this right now. And opening up a, let's see, what's the price of SPY? $379.32. Let's see if I can close this now. Actually, before I close this, so I'll show you how I open this. Oh, here's my portfolio. Sorry, I had the screen blocked off. So I'm hovering right around $6,100 for my account size. See, time is working for me right now. So I open this at 2 hours ago. What time was it? 9:39. So here's how you can see how time works for you. So 9:39. Let's look at the SPY. 9:39 right here. So when I opened this spread, the price was at 378.81. And it cost me $8 a spread because I have 17 of them. Right now the price is at 379.29, and because time is eating away at these contracts, I'm actually up $17 in this. So if I wanted to close this out, right? I'm sorry, I'm kind of all over the place. Actually, first just let me go show you how I open this. So trade SPY. So January 15th. I bought a call. So here's the price, 379. So I'm looking at the daily chart. I'm like, you know what? We got 3 days left. I don't think that the SPY is going to go up to 385. That's why I picked the strike. So I bought the call. Remember, I bought the 386. Sold the 385 because I'm selling something that's worth more money. So I'm getting more money. So when these cancel each other out, it's plus $7. So it's worth $7 now. When I made this trade, it was between $8 and $9. I had an order for $9, but I wasn't getting filled. I'm pretty sure I could have gotten filled if I waited, but I ended up dropping it down to 8 cents, and I got filled at 8 cents. So if you do, I bought 17 contracts. You can see the 17. So $8 times 17, 136. That's how much I received back. Right now, and they have $1,700 collateral that they're holding. Right now I'm break even. So when this was just 7 cents, it was worth 119. So I could have bought, so I received 136. I could have bought this back at 7 cents right now for $119, all these contracts. So they release my collateral and I keep the $17 difference between what I'm paid for this morning and what I would sell it for right now. But I'm going to hang on, because if the price hovers around 380 by tomorrow, these contracts are going to be a lot cheaper, because now we're 2 days to expiration. So I will wait until tomorrow and decide what I want to do from there. The Amazon I'm going to let expire. Well, hopefully they're going to expire worthless. But that's basically it for today. It's what I'm in. It's what I'm currently holding, what I currently made so far. So I'm up 95 for the week. And I will make an update video on... I'll make an update video on Friday. And if you guys want to actually see the trade, let's see, today's the 13th. I actually do have the trade live. See if I can. Alright, so here's me making the trade this morning. I did record it. No sound. See, so the price was right around 9 cents. So here's the collateral. So I just go back and forth to see where the price is a SPY in the 5-minute, because the more you move up, the better fill you're going to get. Once the price starts dropping, that's why the first couple minutes of the day, when you kind of get an idea of where the stock's going for the day, you can get a good fill, even if you're far out of the money like the contracts I like to buy. I'm taking more risk, less reward trades, but the trades I take out of the money are higher probability trades. So you can see I'm trying to look for my placed order, so I'm not getting filled at 9. See how cheap these are? These expire today. So I didn't realize that yet. I'm not even looking at the price. Then I see credit is $1. Then I'm like, oh, these are not the right expiration. So I want to go to the 15th. I wanted to do the 388, 387 like I had before, but it just wasn't paying enough. I want at least, see, so 9 cents is what the mid price is. But I'm going to buy the ask, so I get filled right away. I could have got filled on the mid price. And just like that, I'm filled that fast. 1700 collateral. Here we go. Here's the full layout right here. Oh. Why can I not pause this? Well, you get the idea. Collateral 1700, total credit 136. So that's it. So that's me getting into the trade this morning. So my goal every week is $250, which I've definitely been doing better than every week. So we'll see how these trades play out, and I'll catch you guys in the next one.